All right, so let's get started. Thank you, everyone. I thank you for coming. And so today we're gonna talk about income, right? So like we like to say in mortgage, income is king. So let me introduce myself. My name is Regine, and I'm a mortgage loan advisor. So basically, my job is to help you make your goals of buying real estate come true. I'm your lawyer. So,
Record,
mm,
record.
what did you say?
You forgot to stop recording.
Oh, okay, okay. So, so you guys see my screen, right? So today I'm gonna talk about how you have to work in order to qualify for a mortgage, no matter what. So we all have, so I want to make you feel, help you feel confident about buying your home because it is something that is stressful. A lot of people get scared in the process, but it is not a scary process. If you know what you're doing, if you are educated, you will not feel any fear in doing, in getting what you need in order to qualify for a mortgage. So I've been doing this for I've been in banking for 10 years. I used to own my own company called Icon Graphics. So I am very much used to, getting out there, thinking a different way and, while making sure that I get all my points in there in order. I love what I do. I love helping people. So today I'm going to tell you what you need to do in order to qualify for a mortgage as far as income is concerned. Um, so this is a process, it is very stressful and it's quite normal because it's a significant life purchasing. It's a milestone. It's one of the biggest milestone in your life. And it's a lot of emotion that comes with it. I've had people in tears. I've had people tell me they're gonna quit the process because it's so emotional. It makes it really nosy. It makes it really, I get very nosy and, it's a process that's very intrusive. We get in your business because I need to understand every facet of your life, both personal and professional. And people have trust issues. You trusting me with all your, personal information, all your financial information. And a lot of time there is a lack of support at home. Sometimes not everybody's on the same page. You have kids, you have things, so everyday life comes with it. So it is very normal to get stressed in the process, and fear is pretty normal. And it's my job as a mortgage loan officer, as your advisor, to walk you through this so it can be easier. So I always try to talk your language, right? So when I'm doing something, you come to me and I explain things to you. I explain things in a way that you can understand. So you don't have any issue with any questions. People call me at 9, 5 a.m., 2 a.m. Sometimes I think I'm a doctor or emergency hospital, but that's fine because I understand what they are going through. And this process, what it is, it's you have to know how to change your mindset. So let me give you a little story about a gentleman named Casimir. So Casimir called me in I think it's May of 2023, and he wanted to buy a house. And everybody told him that he was not gonna be able to buy a house because first, he just came to the country in 2023. He doesn't have any credit history. They told him that he's just started working. He was working 3 jobs and Uber. So, and also he has no credit. And they told him you need $100,000 in cash. So family, friends, bank, everybody told him no. But what struck me with Casimir was that he was driven. He wanted it. He said, I'm not used to living at people's house. I come from Haiti and I know what people think about Haiti, but I got it all in Haiti. So I want to come here and do the same thing. So he was working, like I said, 3 jobs and Uber. So I said, Casimir, send me your paperwork. Let me see your visa. Let me see your pay stubs, and I will tell you exactly what to do. So took all his information. I asked him all kind of questions about his life for the past 2 years, what he was doing, and what job he had in the meantime. Casimir is somebody who left Haiti. He went to Mexico for a few months, came here in January, started working in March, called me in May. I gave him a blueprint of what he needs to do, how to get credit, how to get his score high, and how to work his one job because I could not count every single job he was doing. I could only count one job. I told him exactly how to work that one job and how much money he might need. I told him how to deposit the money he had in doing susu. You know how our people, we do susu. And susu is not something that you can just take it and go to the bank and deposit. It's not gonna count. That's for another webinar. So I go and I told him exactly what to do, how much to save, and to come back to me in December. Throughout the process, we get in touch. I look at his pay stub. I make sure that he's doing everything right. And by December, he was doing everything right. He had the money saved. He listened. Like in order to change to be doing something that you're not used to, you have to be teachable. So we had a goal, we had a plan, he executed the plan. I gave him the letter in December to go shopping. And by March, Casimir was the proud homeowner of his house. So what you hear in the media is not exactly, yes, the information may be correct, but your profile is very unique. Just because somebody went through this way doesn't mean it's your situation because your story is always different. And the government, the banks, everybody have a set of guidelines. So I took his story, his situation, I went and I looked the loan that would fit him, and we got him his home, right? So education is I cannot tell you the importance of education. Whenever you want to do something, the first step is to come to an expert, not go to every family members. All right. So there is the first myth that people have about buying a home is that you have to be at a job for 2 years. It's not exactly that. What I need to provide an underwriter is a history of what you have been doing for the past 2 years. And if it fits what we're looking for. So let's say you can change job in 2 years. If you were working at McDonald's and now you get a job that's paying you $10 more, we're not gonna tell you don't do it because you need to be working at McDonald's for 2 years. As long as you're showing progress, and we can see the evidence of the progress and we understand the progress. We can see, yeah, this person is doing something to get better. Then it's good to change job. And what we're also looking for is in the 2 year history, let's say you were at school. School is work for us. You just have to show me your transcript. Let's say you got pregnant and you chose to stay home and take care of your child. We're going to explain why you were off work for 6 months or more, because it has to be 6 months or more. If it's 6 months or less, you can give an explanation, but they're not going to tell you, oh, we need to, this 5 months, it's a problem. We just need to know why. okay? And let's say you were pregnant, you gave birth, you say, I'm gonna take 2 years off. I have to go back and see what you were doing 2 years prior to being pregnant. I have a gentleman who got out of jail. He got in jail for a DUI. He got out of jail. He learned something in jail. While he was in jail, he was going to school. So he came out and he told me he wants to buy a house. I said, okay, work for me for a year. And then you can come back and then you can buy a house. You know why he could buy a house? Because he showed me transcript of the school while he was in jail. So these people want to see that you're not just sitting there not doing nothing, that you're doing something constructive. So in short, it is not 2 years of at the same job or in the same line of work, but it has to be 2 years of productivity, and then I can show any gap that is more than 6 months. You can show me why. And if you have 6 months, I have to go back and account for 2 more years. So point number two is consistency and stability. So those two go together, right? So when you had a job, right? And you are working 40 hours a week this week. Next week you do 30. The next week you do 20. It's not consistent for me. I cannot understand why you're working, inconsistent hours. So always try to work about the same amount of hours, at work. And also try to stay in the same field. Because if you change field, I have to see how you work that field. So let me give you an example. You're a doctor, and then you decided I'm gonna be a lawyer, and you're on salary because you never work as a lawyer before. I don't know if you're gonna like it. I don't know if you're not gonna change your mind, because when we're looking at your work, your paperwork, we also look at your mindset. We also look at your discipline. So we want to see that you're consistent at your job and you're stable, that you're not changing work every 2 months, that you're not getting fired every 2 months. The minute that you have 4 or 3 jobs during the year and there is no good reason, there is no change in income, then it makes it's an issue for us. So we want to see stability and consistency, right? And like I said, employment gap that lasts more than 6 months. It's not going to disqualify you per se, but we need to know why you were not working. And we need to just put it in writing. Everything has to be in writing or an explanation. So basically, you don't need to be at the same job. You don't need to be working, consistently for 2 years. If there is a interruption, document it, keep your paperwork. We're not gonna ask you, like, let's say you're in a hospital. We're not gonna ask you to show the hospital thing, because it's privacy issue, but we wanna see an explanation for it. I just wanna let you know that I'm just gonna go through this and then I'm gonna take questions from everybody. And then there is myth number two. My self-employment or gig won't count. They can only use W-2 income. So all the income I've listed here, self-employment, freelance work, gigs, 1099, tip, commission, and bonus. There is some jobs that they give you, it's called restricted stock units. Let's say you work in the tech industry and they give you're working on something technical. Some employers will give you bonuses based on this. So they give you stocks instead. So this is also income. So for self-employment, it's very, very important that you are working with an accountant or tax preparer who knows that you want to buy a house, because unfortunately you cannot have it both ways when you're buying a house. You cannot get loose and make a bunch of money in your tax return, because then you don't qualify for the mortgage. So if you do make money, you need to declare it. And a good accountant will know how to help you in saving, in your deductions. A good tax preparer, they're not the same, will know also what to do. An accountant is someone who is, savvy, they have a degree for it, they know the ins and out, which is why Trump pays $700 in income tax. And then there's a tax preparer. This is somebody who is um, trained by the IRS and have a license to file taxes. But some of them don't know how to do things properly as well. So as long as we have documented self-employment, if you're somebody who does hair or whatever, you cooking or whatever, and you want to buy a house, you need to show deposits in your bank account, because we will ask to see bank accounts. And then we want to see if you get paid cash, we want to see paper receipts to back those things. So if you intend to buy a house, but then in the next 2 years and you're self-employed and you want to use this, you have to have documents, you have to have a bank account that you deposit that money, and you have to have receipts if it's just cash. And your tax return, line 31 on Schedule C, has to show that you're actually earning enough income to qualify. And then there is other income that also work, rental income and border income. So let's say you own a house and you have a two-family or basement or whatever, and you have someone who's renting it. If you put it on your tax return, we will count it as income. Remember, you can't lose. Don't put a bunch of expenses. And somebody who's a boarder, like you're renting someone a room, if you can show documentation that this person lives at their house, either with a license or their tax return, and also you have receipt for the past 12 months that they're paying you, whether through Zelle, whether you have paper receipt, if they give you cash, then this is income. Investment, retirement, disability, workers' compensation, alimony, Section 8, child support, foster care, military allowances. All those are income if it can be documented. Child support. Let's say you have, and it doesn't need to be court ordered. A child support doesn't need to be court ordered. We just need to see that the person is paying you, and that um, income that comes into your bank account, whether through Zelle or they give it to you cash. Better not cash. It's better not to have cash in this case, but you can show that this person is paying you and it's labeled child support. We will ask you for your bank account. We'll total it, and then we'll say, okay, this is income, provided that this income will continue for the next 3 years. So depending on the states, you can collect child support even when the child is over 18. But it has to be something that will happen for 3 more years. So in short, always keep your pay stub, always keep your tax return, keep your bank statement, keep your court orders, ask your accountant to give you your profit and loss. And if you are on Social Security, keep your letter that tells you how much you're going to get for that year. And, keep those things for 2 years, because that's how we calculate it. Your pay stub, we don't need it for 2 years. We need for a month. But your W-2s, you need to know where to get your W-2s. I have a lot of people that when I ask them for W-2s, they don't know where to find it. Keep your W-2s, make pictures, and before you give it to the accountant, because some people go out of business, or they're not available, and there you are wasting precious time running after a W-2. You can get your W-2 from Social Security office, but you have to pay for it. So important to know that if you receive unemployment, unemployment can be income. If you work a job that is seasonal, let's say a bus driver for school, you work a job that is seasonal and every year during the summertime, you file for unemployment, that unemployment can count as income if you keep doing it for 2 years. So every year, if you drive, if you work in a school system or any other seasonal job and you have, a gap where it's because of, there is no job at that time, file for unemployment. Unfortunately, winning the lotto is not income, but it is asset. So always tell your accountant or your tax preparer if you want to buy a house so they can know what to do. So in short, what we're looking for is when it comes to other income is consistency, stability, and likeliness to continue. So you just have to plan and be strategic. So if you have a spouse, ex-spouse who is giving you child support or alimony, ask them to give it to you to a bank account and label it child support or alimony so we can know where it's coming from. All right, so income, commission, and bonus, then that they are too unpredictable. I'm not going to declare it. So let's say you get tips in cash or you get bonuses, anything that you may not think we can count it, but tell me anyway. I don't know if I can count it. So always be open, keep your receipts. And because lenders, we have a system where we know what we calculate, what we say effective income. So if you come, you tell me I have a bonus, but I don't have it for every year, or they give it to me once a year, I don't know what to do based on what I see from the past. So the takeaway is don't assume you know and consult with someone, and your income doesn't have to be perfect. You just have to earn it and then tell me, and then I'll know how to, if it can count or not. So, because we have guidelines for this. And this is one of the most important term in mortgage. You hear it all the time. It's called debt to income ratio. There is a lot of things that goes into it. Your interest rate, the tax for the new house, the homeowner's insurance for the new house. So we have to account for all the bills that you have, including the new mortgage, and we have to make sure that it fits the limit that the loan that you're getting requires. So a lot of people think, oh, I have a gentleman, he came to me, he said, I owe $23,000 on a credit card. I don't think I'm gonna qualify. I said, why do you think that? Because I owe $23,000. I'm like, so what's your minimum payment? 350. You know what I count? 350. That's the debt that you pay monthly. That's what I count. Your minimum required payments. So that what goes into the bill. So if you have a high and balance on a credit card, don't assume that you can't qualify because we don't count the total. We count the monthly payment. So DTI is basically, we look at your bills, we divide it by your income, which give us a ratio. If and multiply by 100, that's what the DTI is. So as long as you fit inside the DTI of that loan, then you would qualify when it comes to income for the house, because there are other things that we have to look at. So, like I said, each loan has their limits, so always consult with someone. Okay, I went too far. So like Casimir did. This is to move from anxiety to confidence. When he came to me, he was so scared. He was so discouraged because nobody in his surrounding was helpful or giving him confidence. But he wanted it. So he kept asking. And when he kept asking, another realtor referred him to me because I'm not somebody that if you come and you're not ready, I'm not going to tell you no. I'm going to look at it and I'm going to give you a plan. But it is teamwork and I do it for free. So always don't skip that process because if you do and you go to one of those banks, because not everybody does it the way I do. Sometimes you go to a bank, they give you pre-approval. They don't even look at your information. You go shopping, and then when you come back, they tell you don't qualify because they did not know your story. Because your story, your qualifying for a mortgage is more than your income. There is your personal story too. If you have a complicated, you know, story. If you're somebody you have high credit, low things, and you never had any gap in your working environment, then it might work. But always consult with a professional, me, and it's free. So get organized, begin gathering your documents. Don't throw away anything. Keep your W-2s, keep your pay stub for at least 1 month. Um, get with the technology because they give you ways to go on there and always download your W-2. So use it. It's very it's very helpful. You don't have to keep papers. And also anything when you're in the process, even before you're in the process, always consult with your loan officer and your realtor for guidance. Don't go on the internet because it's not you. Your profile is unique. If you go on realtor, you're gonna see they tell you a down payment, they tell you a monthly payment, but it's not you. They don't even know your credit score. They don't even know what your credit looks like. They don't know what your history looks like. So always get with someone who's a professional and get a consultation and follow the plan. The reason Casimir could earn a home within 1 year being in the United States is because he followed the plan. It's because he was open with me. He was honest with me. He told me about his jobs in Haiti, his job in Mexico. So I went and contacted all these people and got the history for his job. That's how I was able to cover 2 year history. Anywhere you worked, always keep contact with whoever you work for because yes, we can bridge the gap, with that employment. So um, we're gonna open the forum for questions. Fanny, you can. No, it's open. It's open. Everybody can talk. I can unmute everyone. So let me know if you guys have any questions. Put it in the chat. Anyone has any questions? Fanny, you can read it for me if they have questions.
Thank you so much. I have a question. I probably missed, you probably mentioned this earlier during your presentation,
Mm-hmm.
but what about someone who just recently got a job, um, maybe for 2 months? What's the process for this
Uh,
person?
I have to see what you were doing before that. And if the job is hourly or salaried, because if your job is salaried, then I don't need to wait for you to be at the job a certain amount of time. But I have to know I have to go back and find out what were you doing before that job. So let's say someone who was working in a bank, and then you were doing clerical work at a bank, and then you go and you work in a hospital right now and you have 2 months. What I'm going to do is I'm going to get the history from the bank, and then I'm going, if I see that it's around the same, because it's the same field because it's clerical. So, but if I see that you are making about the same amount of money, like you didn't go from 19 to 60, then I'm going to count the job as you are working now. If you are hourly, I'll look at what your paid so far is and how, over the time that you've been working there, and I'll calculate your income based on that. It's not really, it has to, all fit. I have to find a history. It has to be about the same line of work and about the same, not, the income is not so different. Because if any of those is different, if you're in a different field, if the income is widely different, you might have to wait 6 months or a year. It depends on how you work your job during those 6 months. If you work your job like every week, you work 40 hours a week, then we consider you stable. But if you go and you're varying, then the hours, or we call it varies. Now you have to wait for a year. If you changed field. Does that answer the question?
Yes. I don't know if anyone has another question. I have another one, but I want to give everyone a chance to speak up if they want to. Maybe I'll give it another 5 to 10 seconds. All right,
Good,
since no one's
good
coming
I
forward.
have a
afternoon.
question. I
I
have
have a
a question.
question.
Mm-hmm.
Oh, sorry, go.
Good afternoon. This is Micheline. Good
Micheline,
afternoon, Regine.
good afternoon.
Yeah, my question is, if someone has money from Haiti,
Uh-huh.
like $300,000,
Mm-hmm.
and what is the process if I want to buy a house with the money from Haiti?
Well, you just have to transfer it 3 months in advance. Wired.
Say it again, please.
You just have to transfer it 3 months before you get into contract. So if you have $300,000 in Haiti, whether it's a bank check, because the banks, when you come with that money, they're gonna ask you where you got it from. They have to report they have to report that you deposited that amount of cash, and
Yes.
the government wants to know where it's coming from. So what you have to do is either do a wire, because the wire will show where it came from. And then you have to wait 3 months, ideally. Not for, you have to wait 3 months, so we don't ask you questions. But that's the best way to do it.
Okay.
Yes, you can use money from another country. We see it all the time. We just need to know if you deposit it like today and then you go into contract, we're gonna ask you a lot of questions to see where it came from. Keep in mind, some countries are not, they're on the bad list for I'm not saying Haiti, but there are some countries that are on the bad list where the government banks cannot do business with them. So see, that's why you have to, if you want to, if it's coming in from one of those countries, there's different ways to do it. But essentially, you just have to have the money in the bank account at least 3 months before you get into contract. Therefore, they're not gonna ask you where it's coming from because it's seasoned, it's marinated.
Okay.
Uber, okay, someone wants to know about Uber income. So Uber income is they give it to you on a 1099, right? So we can know what you did, you made gross. your Uber income transfers to your tax return. So this is where a lot of Uber people, they make a lot of money, and then they go, their accountant, their tax preparer say, I'm gonna make you make money. They go and they put a bunch of expenses that are not, for you. And then you come from 100 to 30,000 on line 31. That's your net profit after your expenses. Because we don't take what you made on top, we take what you declare that you make after expenses. So essentially, you made $30,000. I don't know many places in America where you can qualify with $30,000. So that's why I say when you're buying a house, we need to show two tax returns where you're not losing money or making so little money that you don't qualify. So it's on your tax return what we need for Uber, not because Uber you self-employed. Did that answer the question?
Yes.
Okay. Anyone else?
Yes. I have a question about the 1,000 New York offer for the first time owner.
Um,
Um,
the one
what do
hundred
you really
thousand
need?
dollars?
Yeah, did it start or is something they're working on it?
No, it's always been there. This is not
Okay.
something new. It's always been there. You just have to qualify for it. This is New York City or any other down payment assistance program. It is not, it's separate from the bank. The bank works with it, but it's separate from the bank. I can tell you I tell you my own criteria to qualify. They tell you their own criteria to qualify to get the money. So it's two different
Oh,
process, right? It's two different people. When they give you the money, you just have to show us where you got it from. We'll know it's from a grant. But usually this grant, they tell you how much income you need to make. There is a limit in the income you need to make. There is a limit to where you need to live. And also there is how long you can live in the property before you can sell it. Otherwise, you have to give the money back. So
okay.
nothing is free per se. There is always condition. I tell people if
Um,
I see that you qualify for a down payment, I will tell you. But keep in mind that it's a different process. They have their own criterias. And also, does that fit your what you see for your life? Are you going to be staying in that house for 10 years? Are you someone who's in transit, or you here for school and in 5 years you're not going to be there anymore? Or you're on a contract. So if you're someone who doesn't see themselves there, that's a decision you have to make, whether you want to use that assistance or not. And usually when you do, some of them are forgivable, some of them are not. A grant is free, but if it tells you DPA, down payment assistance, most of them there is some rules before they can become forgivable. Otherwise, you have to pay them back.
okay, one more question.
Uh,
Um, do you have to apply for it first before you start the process to make sure you qualify for it, or
mm,
as well?
they they will want you to start the process with me first, because they
Okay,
want to see a letter, a pre-approval letter that I give you to go ahead and shop for a house. With that, we bring it to them. Then they'll see that you applied basically, right? And then you can apply for that grant, because they need the bank to show. And sometimes they tell you which bank to work with.
okay.
Okay.
Thanks. Thanks.
And stuff. Hi, Regine. Good
Hi.
night. Thank you so much for tonight.
Thank you for coming.
Oh wait,
Uh,
I was muted. Sorry.
okay.
Am
Yes.
I okay to talk now?
I hear you. Yes.
Okay. If you're trying to buy a property, but this is not your first, like your second or whatever, how long of a wait time do you have before you can purchase a second property? Thank you
It
so
de
much.
it depends on what the property is for. It you don't there is if it's a primary home, it's 1 year, because they want you to live 1 year at the first primary home you have. If it's for investment, you can do it at the same time sometimes. Although we don't recommend that because of the TI issue. And if it's something investment, there are many, many different loans that people don't know about. There is profit and loss. There is this DSCR, where basically they don't look at your personal income. They look at what the property is going to bring in income for you.
Oh,
So
I
they
see
look,
what you're saying. So if you are going to purchase a second property, but then you're going to be using it as a business or rent it out or something like that, or if you're going to rent the one that you currently live in, to move into the other one that you're going to buy, they will look at that as investment
as
versus a debt.
investment property. Yes.
Okay. So it
Yes.
it wouldn't affect your DTI as severely as it would
Mm,
if you were like buying another home.
exactly. So there
Oh, okay.
are other guidelines that comes with that, but that's where we put the every, where you do consultation, and then I get a bigger picture, and then I tell you this is
Okay.
this is the best way to go about it. This is the loan that would fit you based on
Okay.
your
And then
finances.
my final question is what is the credit score at this time? I know before they had 620, 640, whatever, but what's the minimum credit score you must have now to
For
apply to buy a house?
for which loan?
For loan to purchase a house, whichever one.
Well, FHA, the very minimum credit score with FHA is 550. If you put 10% down and you have good credit. I mean, the thing with good credit is, right, you can have a 550 credit score and you have a good history, but something happened one time and your score is 550, but you have 10% to put down on a house. Yes, you may qualify for that house. And then there is 580, which is the standard. This is what FHA, which stands for Federal Housing Authority. This is the type of loan that the government insures, meaning that if you don't pay, the government will pay the bank and take the house from you. All right. So this loan requires 580. Some banks will tell you their minimum is 620. The government can say something, and then some bank have what they call overlays, but generally it's 580. For a conventional loan, right? A lot of people think you have to put 10% down. No, you don't. 20% down. I've closed loan with conventional loan where it's 3% down, even less than FHA. 3.5% FHA requires. And if you have the great history, the great credit, the good DTI, you can get into a house with 3% down. This loan, it's 620, the minimum credit score, but it's better if you have a higher score because it just gives you a better rate. But that doesn't mean you cannot qualify with a 620 credit score. So
Thank you so much.
you're welcome. Okay, Charlotte, what's the question?
I have a question in regards to young adults buying home. If you have, let's say, a 19-year-old, they're in college and they want to start getting their first property, um, is that something you would advise they do at such a young age?
Well, this if you started credit with them, right, they have to they legally can buy a house because they're of age to sign a contract. The what you have to do in the beginning is start with their credit. Put your child on your good credit card. It gives them a credit history. The minute they turn 18, get them their own credit card because it takes 6 months for a score to generate for on their credit for mortgage purposes. So what you're gonna give them is a history of credit, and then if they get their own card and they use it well for 6 months, they're gonna see that this child, this is not a child anymore, that this young lady or young man has used credit responsibly for 6 months on their own, right? So that's the way to go. And also, if they are making enough money, listen, I have this if they're it's basically where you buying the house. It's not in New York, it requires more than it does in Ohio for you to make. So it's location, location, location. So if she's somebody making, um, I have a lady, she's making $60,000 a year. She came to me 3 years ago and she wanted to buy a house. I told her you need to buy a two-family because that's the best way to bump your income. That's another webinar. Um, she bought a two-family, rented the other side, did everything I told her, and she's making $66,000 a year, right? This year she came back to me. We had a plan, right? So she rented the house, lived in it for a year, moved back to her mom's house for a little while, and then applied for a mortgage. And again, with guidance, I told her exactly what to do. And now at 35, making $72,000 a year, she owns two properties. So it's location. She's in Connecticut, right? So the whatever your daughter is making, if she's making a good $50,000 a year and she's buying a house in Ohio, it's possible she doesn't have a lot of debt, but good credit, can find a house, yes.
Someone wants to know, can you be
Thank
approved
you.
in this?
Oh, from what?
Can you be approved for mortgage?
Can you be approved for a mortgage and then end up losing it? You mean losing the house?
If they're approving it.
Well, yeah, if I go and approve you, right, based on information I have now, and then you go and you buy a car that's costing you $700 a month, that debt was not there before. It may cause you not to be able to buy a house anymore, which is why we tell you do not apply for credit unless we tell you so. Yes, you can end up losing your approval if you go and you do something, your credit tanks, or you have too much debt, or you change job without telling me. I had Fanny, who is helping me right now, is with the hosting. She's also a realtor, and we had a deal where the gentleman told me he retired in the middle of the contract. I said, no, you did not retire. You're gonna go back and get your job back because we worked a lot to get you there. So he had to go back and get his job back. He quit in the middle of the process. That made it that he could not qualify anymore because the lender knows. Like they called me and said he left the job. And I had one who applied for credit before closing. She had to go and send me all her information before we could allow her to close. And I think that was like, no, it wasn't even, it was an hour before closing. If she didn't send me this thing, if I wasn't on top of my game and available, she would not be able to close because the lender told me, oh, her credit came back that she went and applied for a new credit card. And I had to go ask her, call the credit card, give me your bill. That's how she closed on the day she was supposed to close. Otherwise, she would not be able to. So after I give you the pre-approval, you do not do anything without asking me. Otherwise, things can happen that nobody wants. So does that answer the question?
Yes.
Okay. Anyone else? Okay. All right.
I have a
So
vision.
go ahead.
This is in regards to a friend of mine that I know currently purchased a home, moved from New York, purchased a home in Georgia. The property, after getting the property 2 years later, had to file for bankruptcy, going through divorce.
Mm-hmm.
She still live in the home. She continued to pay her mortgage as agreed, right? The home was not included in the bankruptcy. So
Mm-hmm.
now the home has built equity and stuff like that. However, post bankruptcy, I don't think she has even been able to touch the equity because she's in limbo as to, how did that affect her, um, if anything. Because she stayed there, she continued to pay her mortgage. Nobody has ever told her that she had to move or anything. And I always told her, you need to figure out what the situation is. Because if you're living there, you're paying the mortgage, the deed, with the county still shows that it's your name, then you're responsible for repairs and all of that. So how does that work? Is it a mortgage professional that she has to contact or a lawyer?
Well, you can buy a house with bankruptcy. We can buy on your credit. You can buy a house with a foreclosure on your credit. It will depend on the type of loan you're going for, and the time that elapsed, and if the bankruptcy is completed, where it's closed. So no, you don't need 7 years, you don't need 10 years. It's a different, every loan has a different timeline. There is some that tells you 3, some that tell you 4, some that tells you 2, and it depends on the type of bankruptcy. So a bad period in your life is not going to stop you if you are doing what you're supposed to do, after that. They just ask to some timeline for it and an explanation. So it's better for her to consult a professional so we can see what type of bankruptcy it was and how her credit is since then.
Okay, sure thing. Thank you for the answer.
Okay.
Is
All
that
right, so we have 2 minutes.
I can refer that someone to you, right? To look into
Okay.
it.
Okay. Thank you. So I want to thank you guys, and you can get my information here, and you don't need to be ready to ask me any questions. You don't need to be ready to file an application. The application is just for me to see your situation, and then if you're not ready, I'll go give you the blueprint. You follow it. I guarantee you can buy a house provided nothing changes. So financially, or you lose your job, or something happened, you have to declare bankruptcy. Even then, there can be ways that you can plan for what you want. And don't assume you know everything because you hear it on social media or you see it on the internet. There is a lot of gray area when you are buying a house. They don't, it's not one size fits all. Okay, so save my number, save my email, feel free to contact me, and let's get you guys to path to ownership. All right. So thank you everyone who came. I really appreciate it, and I'm gonna try to do more. And I will send you more information about myself in the email. And also thank you to Fanny from the 111 team who was very gracious to come here and help me with the chat. I will send you a copy of this also.
All right.
All right. Thank
Thank you
you.
so much. Thank you.
Okay, anyone has something to say? Okay. Thank you. Have a great day.
You too.
All right. Bye. I don't know, dude.